Morning everybody, Mike Niemiec here, wrapping up this week, Friday, February 16th. Once again, it's a three-day weekend. A reminder there, after today's close, regular time close, we won't open again until Monday night, with Monday being President's Day. The overnight trade was somewhat on the subdued side. We've got wheat prices down around 3 cents, the corn market and bean market unchanged. Meal market still just darling down here, up around $2.50, with the soybean oil market down around 5 points. It's also been somewhat of a firm week for prices, except for one commodity, that being the soybean oil, because of the meal. The meal market's up roughly around $25 on the week. Soybeans are up around 40 cents. Corn market's up around a nickel. The wheat markets are up around a dime in the winters, unchanged in the spring. And with that strength in the meal market, we've got the crushing margins up roughly around 15 cents at $1.31. All in all, this has all been a backdrop of two things: the concerns over South American, Argentinian weather, and then also the padding of their long positions in the meal and getting long the beans and covering their short positions in the grains and the oil seeds and the oil to a degree, all giving the updraft to the market at this time. A couple of articles overnight on the wires. It kind of alludes to what's going to happen next week. At the end of next week, USA is going to have their annual Ag Forum conference. They're going to go over and give informal talks about what they think the 2018 marketing year is going to be. But as they said it last night in their recap that came out all the way to 2027, that they say that the U.S. share of global sales will shrink as competition from South America heats up. So once again, if we continue to have big supplies here in the U.S., they're looking at our share as far as trying to do export competition shrinking. Not very good for the balance sheet on the bottom line. Brazil, they had a story out that they're looking at a good grain crop this year. It says that it may even surpass last year. And then we mentioned yesterday one of the grain exchanges came out and talked about on how they thought that the bean crop and corn crop were shrinking. The Buenos Aires exchange came out as well, and they were also talking about that. They're saying that their corn and bean crops, because of the lack of rain, is in very poor condition. So that'll take place as far as importance as we move forward going next week, along with what's going to happen with the Commitment of Traders report. As I mentioned yesterday, and overnight, the preliminary open interest and the player sheet both show that where the trade has been padding their lead as far as getting long the beans and extending their length in the meal, and then in the wheat, corn, and soybean oil, they're still seeing modest to net shorts. So in conjunction with the Commitment of Traders report, in conjunction with the weekend weather updates, in conjunction with the USDA coming out next week, and also with the Chinese coming on back, Monday night trade and next week's trade can show a lot of volatility, especially if we kind of hang near the unchanged levels here today. Once again, these are my opinions, not that of ADM or ADMIS. Have a good holiday weekend. Thank you.